Good morning, I'm Maiki Oreta, and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. The country's budget deficit widens to 84.8 billion pesos in August. Budget Chief Amenah Pangandaman assures that there will be no re-enacted budget for 2026. And the Philippines is named the world's most disaster-prone nation for the 21st year in a row. First, let's take a look at how global financial markets performed overnight. U.S. stocks closed lower for a second straight session Wednesday as investors booked profits, with indexes hovering near record levels. The drop follows Federal Reserve Chair Jerome Powell's warning that stock prices may be stretched and comes ahead of this week's inflation report. Investors are closely watching the Fed's next moves, gauging the pace of potential rate cuts as it balances a weakening job market against inflation risks. Valuations are now at their highest since 2021, with a further climb likely to push them to levels last seen during the dot-com boom.
Broad market stock investors are seeing slight declines on the day, largely fueled by profit taking and some concerns about global politics, but not enough to move things of any real appreciable measure. In general, the market is still relatively calm, as noticed by a relatively low VIX, and the fact that no matter what seems to happen, week on week, month on month, equities still seem to want to go up.
The Dow Jones Industrial Average lost 0.4%, the S&P 500 lower by 0.3%, and the Nasdaq lower by 0.3% as well. Over in Europe, markets there ended mixed. The London's FTSE higher by 0.3%, Germany's DAX higher by 0.2%, and France's CAC 40 going the other way, lower by 0.6%. The national government's budget deficit widens to 84.8 billion pesos in August, a sign that fiscal pressures are building. Treasury data shows this is 56% higher than the 54.2 billion peso shortfall posted in the same month last year. The bigger gap was driven by weaker revenue collections, down 8.75% to 352.5 billion pesos, pulled lower by a drop in non-tax revenues. For the first 8 months of the year, the deficit has now reached 820.2 billion pesos, putting pressure on government borrowing and its ability to fund priority programs. HSBC's ASEAN economist Alice Dacanay says that the Philippines needs to embrace a weaker peso, seeing it not as a threat but as a competitive edge. At the International IT BPM Summit 2025, Dacanay urged the country to boost service exports. He noted the Philippine IT BPM industry is growing by just 2% of GDP compared to India's 20%. Dacanay said India is gaining market share as the rupee depreciates 6% this year, making its services about 5% cheaper than the Philippines is in just 3 months. He called this a wake-up call for the economy. Reyes Tacandong and company senior advisor Jonas Ravelas added that a weaker peso boosts competitiveness, giving foreign investors more value for their money. The Budget Department is confident that the 2026 national budget will be passed by the end of the year, even as the flood control scandal continues to unfold. Paolo Barcelon reports.
Budget Secretary Amenah Pangandaman is confident the 2026 budget will be passed by year-end. Pangandaman says they will let Congress closely scrutinize the budget, especially after the flood control scandal.
Yes, oo. Tuloy-tuloy yung pagbabasa ng Kongreso nung sa DPWH budget. I think tapos sa plenary na rin siya next week. And then I think the House of Representatives are also released already yung committee report nila. Kung saan makikita natin yung kung saan nila nilagay yung reduction ng 255 billion from the DPWH budget.
Pangandaman reiterated that the agency has nothing to do with insertions it discovered in the 2026 national budget.
You know, as to the insertion, hindi natin alam. Basta tayo, ang DBM, kinukuha natin yung mga requests, yung mga proposals ng mga departments at agencies. At papag-aralan natin yan. Depende sa level ng budget na kaya na binigay din ng DBCC sa atin.
Pangandaman says economic managers noted that some public works projects were not included in the DepDev's 3-year rolling infrastructure program or TRIP, something that they are working to make a requirement in the future. The Budget Department also says it is expecting a lower budget utilization rate for the DPWH, especially as Public Works Chief Vince Dizon suspended the bidding for all locally funded infrastructure projects. The DBM adds it has yet to see any negative economic effects.
Hindi pa naman natin nakikita, quarterly naman ang pag-compute natin yan. But again, inuupuan na natin together with the DBCC, inaayos na po nila yung mga numbers, and then pag nag-meeting kami, makikita natin kung may epekto ang lahat ng ito.
The Budget Department adds one possible agency that can benefit from funds removed from the DPWH is the Philippine Deposit Insurance Corporation, or PDIC, which will require 100 billion pesos, especially as they have raised deposit insurance coverage to 1 million pesos from the previous 500,000. Paulo Barcelon, Bilyonaryo News Channel.
The Finance Department is now open to talks on a wealth tax, a levy aimed at billionaires that could mark a major shift in revenue policy. Sultan Kudarat Representative Bella Swansing said that the DOF is willing to consider including a wealth tax in the government's revenue program. Proposals have floated a 1 to 3% levy on the net assets of the country's richest, though no formal bills have been filed in Congress. Finance Secretary Ralph Recto, who once opposed new taxes, now says he will support whatever measure Congress passes. Batangas Representative Leandro Leviste had earlier backed a land-based wealth tax to offset his proposal to cut value-added tax from 12% to 10%. Former Budget Secretary Butch Abad says that the scale of congressional insertions under the Marcos administration is unprecedented, warning it could top 2 trillion pesos in just 3 years. Abad said at least 1.445 trillion pesos was reallocated between proposed and final budgets, on top of an estimated 600 billion pesos in flood control insertions. He pointed to early line items for flood projects and cash aid programs like AKAP, Ayuda para sa Kapos ang Kita, as signs of collusion between lawmakers and public works officials. In 2024 alone, he said over 560 billion pesos was diverted from priority funds into flood control and cash aid. The flood control scandal now reaches the very institutions tasked to guard public funds. The Office of the Ombudsman is investigating Commission on Audit Commissioner Mario Lepania over alleged links to anomalous projects. Quezon Representative Keith Tan, who sponsors the Ombudsman's 6.2 billion peso budget for 2026, confirmed the probe. House Deputy Minority Leader Antonio Tino earlier revealed that Lepana's wife, Marilu Laurio, runs Olympus Mining and Builders Group, awarded more than 300 million pesos in flood control and farm-to-market road projects in Bulacan this year. The Justice Department is also conducting a parallel investigation into the couple's role in the scandal. The Bangko Sentral ng Pilipinas now warns the 6 to 7% growth target may only be met by 2027. Infrastructure spending has surged from just 1 to 2% of GDP under GMA and Pinoy to 5 to 6% under Duterte and Marcos. But with half of that money reportedly stolen or wasted, the real impact is only 2.5 to 3%, explaining why growth hasn't accelerated despite record borrowing. So are the gains being stolen? To help us make sense of the true state of the economy and what it means for companies, markets, and investors, we're joined by Jonas Ravelas, Senior Advisor at Reyes, Takandong and Company. Good morning, Jonas. Thanks for being here with us.
Good morning, Maiki. Good morning to your listeners.
Yeah, lots to unpack, Jonas. Let's start with a bigger picture. The BSP warns that the 6 to 7% growth target may not be hit until 2027, with slowing growth and corruption scandals clouding sentiment. What would you say is the true state of our economy right now?
We're currently in a holding pattern. I think from 2022 to the 2024, we were mired by the impact of higher inflation. And of course, to a certain extent, looking back, given these corruption issues, that helped contribute why we're not feeling the impact of this growth that we've seen. At the same time, in 2025, the added worry of Trump's tariffs have really kept investors and business on the sideline.
Yeah, domestic issues and an uncertain global climate, it's really clouding the outlook for anybody. A lot of the people have been saying that the growth that we've been feeling, the Philippines has been registering growth of about 6% on average for the past 5 years. But a lot of people are saying that they aren't feeling the gains on the street. How much of this is because of corruption and all the money lost to leakages, Jonas?
Well, basically, I think one of the things that we can probably look into it is that we can look at it from an analogy of a driver starting his car, driving, and without putting down the handbrake. So there's no acceleration. We're just holding to that probably 5 to 6% growth, and we're not feeling it. And one of the main factors is inflation. From 2022, we were really hit by that. And remember, we were still recovering from the pandemic. And then you add the corruption issues. So these factors eventually did not help trickle down to the grassroots in terms of growth.
Yeah. So right now, our economy, we're in a holding pattern. We're just surviving. 70% of the growth in the Philippines is driven by consumer spending. With a government holding back on expenses in light of all of these corruption revelations and allegations, what is your outlook now for growth?
Well, for 2025, I was actually initially looking at 6%, but most likely will grow closer to around 5.7%. Hopefully, with inflation currently at 1.5, I think this below 2% trend could continue till year end. So that should at least see some recovery in consumption between now and year end.
Going back to an earlier report from just earlier this morning, the national government's budget deficit widens to 84.8 billion in August. It's a sign that fiscal pressures are building. What are your thoughts on this amount, Jonas?
Well, basically, I guess given the slowdown in the economy and again, slower revenues, the challenge really is that most likely government borrowings will continue to rise. And that means for the local investor and business is that could keep interest rates, particularly on the long term, holding up despite expectations of rate cuts on the short end.
Going to infrastructure spending, Jonas, infrastructure spending has climbed from 1 to 2% of GDP in the past to 5 to 6% of GDP. We've got those figures on the screen. Half of it is lost to corruption. So the real impact is really just 2.5 to 3%. In terms of economic performance, why hasn't bigger spending delivered faster growth?
Well, basically, I guess one of the things is that we've expected that these infrastructures would attract foreign direct investment, especially with the push of moving into manufacturing under President Marcos. However, that has slowed down. And again, when people see the impact to our infrastructure with these climate-related issues like floods, it's very difficult to look at the Philippines as a manufacturing destination, especially when we still lack infrastructure. Although it is promising because of our our geography, meaning we're very strategically located within the ASEAN. So this is actually good for us. It's just that with all of these issues of corruption, as well as the lack of infrastructure, is deterring potential investors.
Yeah, not to mention the Philippines was just named as the world's most disaster-prone nation for 20. It's the 21st year in a row. So the location is it's a boon and it's a bane for us. Jonas, according to the DBCC, our infra budget for 2023 to 2028 is around 1.5 to 1.6 trillion pesos. That's it equals our deficit. So all of it has to be borrowed. If half is wasted, are we simply piling up debt without that growth dividend?
Well, basically, we have to continue with this infrastructure spending. Now, the problem really is that if we continue without doing the necessary adjustments in transparency, accountability, and governance, then we're really, we're trying to put burden to our future generations with this debt.
Yeah, we have to be careful with that money because, we don't want to just be borrowing money for thieves. Jonas, tracking the latest debt figures under President Marcos Jr., this is based on the Department of Finance, the DBCC, and the Bureau of Treasury. Our national debt has reached 21.9 trillion. That's up 9.1 trillion pesos from the start of the term of this administration. Our debt to GDP ratio is now at 60.3. That's close to the international red line, which is 70. From your perspective, how should we interpret this debt buildup?
Well, you have to understand that we came from a pandemic and we're slowly getting out of this. And you have to understand that this administration inherited a huge portion of the debt from the pandemic. So it gives them little wiggle room to make the necessary adjustments so that we get to see a lot of activity. So unlike in the Duterte administration, when they came in, it was at 39%. So if you were to look at it from a simple credit card debt, you have a 1 million credit line. You've done 390,000 used under Duterte. And right now, it's just 600,000. So you have very little wiggle room to make a budget. So it's very difficult for government, especially now that, things are tied with the DPWH secretary holding local infrastructure. So we need a portion of that for them to spend into the economy.
Yeah. At 60.3, how worried are you, Jonas? Debt to GDP ratio at 60.3.
Well, I think at 60.3, we still have a lot of leeway, even though it's near the 70%. We've been worse, way over 70% during the 1998. So I think we still have some wiggle room to move. Remember that the economy is much stronger now than where we were during the late 1990s.
Yeah, okay. Speaking of the economy, President Marcos ordered the DPWH to slash 252 billion pesos worth of flood control projects flagged for irregularities. That's nearly 30% of the 2026 proposal. From a macro perspective, Jonas, how do these cuts affect our growth?
Well, basically, what is important really when we think about economic growth is the easy translation of this spending that will trickle down to the economy. And infrastructure spending helps create jobs. So this is, I think, what we saw during the former President Duterte's term, that with the build, it actually created a lot or unlocked a lot of those disposable income, given the set of low interest rates and what from where they were standing at that time. Now, fast forward to today, that we're still challenged by high inflation, shifting infrastructure spending to probably like education, health, and probably even agriculture for food security will mean longer gestation period to get the trickle-down effect rather than the infrastructure spending.
Yeah, it will be a multiplier, but again, a much longer gestation period, as you mentioned. Going back to inflation, Jonas, inflation is at multi-year lows. Headline inflation is below 1%, core just above 2%. How sustainable is this trend? And when you talk about the risks in the second half, there's oil, there's La Nina, there's the global shocks. how big of a concern is this to you?
Probably between now and year end, we'll probably end the year slightly below 2%, probably 1.7%. So this actually gives a lot of room to for BSP to still cut possibly rates by another 25 basis points to 475 as early as this October.
Yeah.
And move forward to 2026, I think we can probably say 2-3% would probably be where we see inflation averaging in 2026.
Yeah, with the Fed cutting interest rates, that gives the BSP more room to do so. They meet next on October 9th. You're expecting a 25 bips cut by the end of the year. What about for 2026, Jonas?
Well, initially, I think my baseline is still looking at probably if we end at 475, then probably we're looking at another maybe 50 to 75 basis points. That will depend on how we look at the inflation picture. But if it stays between 2 to 3%, I think we can go back to the 4%. And that I think that will help growth and probably secure that 6% by 2027.
At the same time, Jonas, there are expectations that GDP targets for 2025 through to 2027 could be revised lower. Right now, the PSE index is at about 6,100. We are trading at the steepest discount to our peers in the region since 2009, 16 years. If growth targets, if our GDP is revised lower, how much lower do you think the PSE index will go?
Well, basically, I think the risks are between 5.5 to around 5.8 to probably reflect the slower growth and eventually the doubt. The steep discount is actually the doubt of investors to our capability to sustain growths above 6%. And despite the PEs of the market at 9 times forward PE, relative to our peers of 17 times, it's really showing the non-confidence or the fears that we're seeing, whether it's driven by inflation, driven by concerns over the tariff, or most likely the corruption issues. So, but the global uncertainty is actually one of the biggest that has kept investors sidelined.
Yeah, wow, 5,500 to 5,800. But what would be your year-end target for the PSE index at this current trajectory, Jonas?
I think would be very lucky to probably stay at 6.1.
Wow, ouch. Okay, wow. Okay, let's see. Foreign funds, this macro backdrop. We've got, easy inflation, lower rates, plus the governance risks. How much more difficult is the Philippines to sell at this junction?
Well, basically, I think at this point in time, it's just a matter of pricing. I think we have a compelling issue, and I think this is, one of the very easy way of describing where the Philippines is. The present value of the Philippine stock market is like a fried chicken, probably 350 pesos, one whole chicken, while Peking duck is basically around between 2,500 to 3,000. So that's how heavily depressed the Philippines is. However, you need to give an incentive to investors. And the only thing that is not happening is that, when the tariffs were announced at 19%, the peso was trading between 56 to around 57. With these corruption issues at these said levels, the peso is still at 57.75. So the market hasn't really adjusted, probably because we have a very good central bank that helps manage the volatility. But what we need as a country is to be able to sell it at a good price. Since we don't have that much infrastructure, we don't have that much resources, but we have a good opportunity in the Philippines for manufacturing. We have strong services. So we need to devalue the peso, or shall I say, slightly adjust the currency so that we become competitive.
Yeah.
And probably in my book, we're looking at probably closer to 58.50 to be a good level to be competitive to our peers. And this is the problem of the tariffs. Indonesia, Malaysia, Thailand, all had 19%. These are manufacturing countries. The Philippines is not yet a manufacturing. So if they are going to remain competitive and sell their exports closer to 2024 levels, they'll have to depreciate their currency by roughly 9%. We've already seen India adjusting by 5%. So if these other countries feel that their exports aren't competitive with the Trump tariffs, then definitely a creeping depreciation will most likely materialize.
Okay.
So that, I think, is something that's lacking. So probably at 58.50, we could see the likes of tourism, flourishing if the peso were a bit weaker. So there are other markets that would benefit on a weaker peso. Plus, it will help our spending thanks to the OFWs.
Yeah.
Because their value for money is much higher because their income is dollars.
Yeah, echoing the sentiments of HSBC economists right there, Jonas. Another thing I wanted to ask you, what's your advice to investors, to CEOs, C-suite executives, and retail investors as they navigate this junction, Jonas?
Okay, well, I think at this point in time, given that we're expecting probably at least 25 basis point cut in the Philippines and probably the Fed, the fourth quarter to early first quarter could be a good opportunity to issue debt. So this would be a proper time to probably look into the present situation and reassess their plans moving forward. So don't get discouraged with all of this global uncertainty. Sectors such as food, retail, and real estate are the key sectors to look into. And real estate takes time. So regardless of the weather, the geopolitics, they just have to press on and take advantage of you just have to steady the course and, take advantage. If interest rates were to go down, probably fourth and first quarter is the time to look at borrowing opportunities. And for investors, take advantage of these uncertain times to probably, position yourself, especially when the dividend yields at these levels are probably between 6 to 7.5%.
Right. Okay, one more thing before I let you go, Jonas. Wanted to get your reaction on a proposal by former Finance Secretary Cesar Purisima. This is with regard to corruption. He suggested the demonetization of 500 to 1,000 peso bills, lowering the highest circulating note to 200 pesos as a way to deter corruption, because it's gonna raise the cost and the logistical difficulty to move that money around, that dirty money around. Jonas, what are your thoughts on this?
Well, it will be a deterrence for this type of activities. However, we know that these people are, they find ways to be able to move money in other ways. So by lowering the denomination, that makes it difficult to probably keep this money in physical. So it might be difficult for just one room to put in 1 billion pesos. So they probably might have to buy a house. So again, it gives you a lot of ways to try to track these people in their purchases now that you have lower denomination. But again, this will also provide them to look into the likes of crypto, and we need to be able to ensure that we're able to track these digital currencies more closely.
Yeah, if there's a will, there is a way. Jonas Ravelas, thank you so much for sharing your thoughts on all of this and more with us.
Thank you for having me, Maiki.
We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back. Let's check on Asian markets this Thursday morning. Right now, the Nikkei 225 is in the green, higher by 0.2%. All the other indices are going the other way. Hong Kong's Hang Seng Index is lower by 0.2%. Shanghai's Composite down by as much, down by 0.2% as well. And Singapore's Straits Times Index down by 0.2% also. Now here at home, Philippine shares extended their slide yesterday, dropping for a third straight session as bearish sentiment prevailed with no clear catalysts in sight. PSE Index slipped nearly 0.2% to close at 61.08. All sectoral indices finished in the red, led by property, down almost 0.4%. Decliners outpaced advancers 103 to 88, while value turnover was thin at just 5.3 billion pesos. Taking a look at the main gauge this morning as of 10:36, the PSE Index continues its slide. Right now, we're down by 0.3% to 60.89. Now, all shares index is down as well, down by 0.25% to 36.73. Taking a look at the sub-indices, gains in the financials and services counters are limiting the market's slide right now. Total volume traded is at 1.27 billion shares, valued at 1.51 billion pesos. Market breadth is bearish. We've got 83 decliners, 61 advancers, and 40 stocks unchanged. Taking a look at the currencies, the peso opened at 57.75 against the greenback, down from its previous close of 57.46. Experts are renewing calls for good governance and better prioritization of funds, warning that more money is flowing to dole out projects instead of high-impact programs. Paulo Barcelon returns with this report.
Economists and political analysts say government should prioritize high-impact projects over doleouts in light of the recent Ateneo School of Government study showing how key programs that can be linked to political patronage have been given additional funding. In its recent position paper, the ASOG, citing budget reports, shows that programs such as subsidies for the Pantawid Pamilyang Pilipino program or 4Ps suffered cuts, with PhilHealth subsidy even reduced to zero. Only recently, the Marcos administration returned 60 billion pesos worth of funds from the National Treasury to PhilHealth. At the same time, programs that can be directed by politicians, such as the AKAP, medical assistance, assistance to individuals in crisis situations or AICS, and TUPAD programs, got a total of 130 billion pesos in 2025. RCBC Chief Economist Michael Ricafort says moves like these only reflect the need for tighter fiscal discipline, especially since the government is operating on a budget deficit.
There should be that kind of flexibility, but otherwise, lalawak na yung budget deficit tsaka yung utang ng Pilipinas, no? Kung mas malaki yung gastusin, no? Sa anumang bagay, lalo na yan, related sa yung mga related sa ayuda or mga dole-out or yung mga, kasi importante naman talaga doon, it's an investment approach, kailangan may balik. No, kung maggastusin, mas malaki eventually yung pakinabang sa economy and society natin. Yun yung key takeaway doon, no?
For political analyst Dennis Coronacion, the national government should have more control over these assistance programs as politicians usually take advantage of doleouts for their benefit.
Naging utang na loob sa politiko kasi parang inaako nila yung project na kanila yun. Just by being present. And second, just by during the budget process, talagang they would see to it na a big portion would be diverted to these dole-out schemes.
Both Coronacion and Ricafort say reforms pushing for higher impact programs are more important than doleouts, especially as the country has been open for business since the end of the pandemic. This means the need for more dole-out-based solutions to poverty should be reduced. The two analysts also said that the flood control scandal should make the government more prudent in handling its resources and prioritize good governance over temporary aid solutions. Paulo Barcelon, Bilyonaryo News Channel.
Senator Sherwin Gatchalian is moving to block the return of the Department of Social Welfare and Development's Ayuda para sa Kapos ang Kita or AKAP program, calling it redundant and overlapping with the existing AICS cash aid. AKAP was earlier flagged by the Commission on Audit for failing to meet targets and for wasting public funds. Lawmakers say they would rather beef up AICS, which already provides assistance for medical, food, and burial needs. But under the Department of Social Welfare and Development's 2026 budget proposal, AKAP is scrapped. AICS faces a cut of up to 15 billion pesos, and other programs are also dropped. Social Welfare Secretary Rex Gatchalian says they will make do with what's approved, but would welcome more support. On another front, gaming firm DigiPlus Interactive Corporation is taking its expansion global, filing for 3 operator licenses with the Western Cape Gambling and Racing Board in South Africa. In its disclosure, DigiPlus said it applied for a national manufacturer license, a bookmaker license, and a bookmaker premises license. The company notes that the WCGRB is a preferred jurisdiction for international operators because of its transparent regulations and digital readiness. Chairman Eusebio Tanco says that the filing marks another milestone in the firm's global growth strategy, adding that DigiPlus aims to bring innovation, responsible gaming, and localized content to one of Africa's most dynamic economies. San Miguel Corporation is pouring more money into its flagship airport project, adding 262.7 million pesos to the Manila International Airport development. In a disclosure, the company said that the funds came from the proceeds of its 20 billion peso fixed-rate bond offering. Total disbursements from the offering have now reached over 17.1 billion pesos, leaving a balance of 2.55 billion pesos. MegaWorld is joining the wave of buybacks among Philippine conglomerates, with its board approving a 2 billion peso share repurchase program. In a disclosure, the company said that the move aims to boost shareholder value, as current market prices do not reflect the true value of its stock. The program will run for 24 months, with purchases made through the Philippine Stock Exchange. Funds will come from internally generated resources, and all shares bought back will be recorded as treasury shares. Now, Ayala Land is stepping up its buyback program, repurchasing another 500,000 shares on September 24th, part of a wider trend with MegaWorld and SM Investments also moving to lift their stock values. The transactions were done at prices ranging from 26 pesos and 25 centavos to 26 pesos and 60 centavos per share. After the buyback, outstanding shares fell to 14.53 billion, while treasury shares rose to over 2.17 billion. Almost half of Filipinos admit to hiding the truth about their finances, making the Philippines the most financially dishonest country in Southeast Asia. A report by Singapore-based fintech firm Roshi shows a 47% financial misreporting rate, driven by social pressure, low financial literacy, and a culture that ties family honor to financial image. Young adults were the most likely to be dishonest, while older Filipinos tended to be more truthful about their money situation. The study also flagged widespread overconfidence and present bias, with many Filipinos choosing short-term spending over long-term savings. Roshi says any solution must confront both cultural values and economic realities to promote honest financial behavior. The Philippines holds an unwanted title, still the world's most disaster-prone nation for the 21st year in a row. The 2025 World Risk Index cites typhoons and floods battering communities, while billions of pesos meant for protection vanished in graft scandals. India ranks second, followed by Indonesia, Colombia, and Mexico. The index weighs exposure to disasters like cyclones, floods, and earthquakes, alongside poverty, inequality, and weak health systems. According to the report, the Philippines faces a broad spectrum of hazards, but river and coastal flooding remain the biggest threats. And making matters worse, corruption scandals continue to hound the government's flood control programs. We're taking a short break. Business 360 will be right back. Welcome back. Embattled Ako Bicol Representative Zaldi Ko, at the center of a multi-billion peso flood control scandal, is reportedly heading to Spain after first arriving in Singapore on September 16th. This comes just days after former DPWH officials testified in the Senate accusing Ko of pocketing 1 billion pesos in kickbacks from flood control projects. Amid the controversy, his son, Elis Ko, posted a strong statement on Instagram denouncing corruption, calling out his own father and urging him to face the public and be held accountable. Elis also stressed that his fashion brand operates with integrity, seeking respect for his team amid the backlash. But many netizens remain skeptical, pointing to reports of Elis's deep connections to his father's business dealings. The flood control scandal takes a new turn with dismissed public works engineers and top contractors now entering the witness protection program. The Justice Department confirmed that former engineers Henry Alcantara, Bryce Hernandez, and JP Mendoza have been admitted. Contractors Curly and Sara Discaya were also granted coverage. Justice Secretary Jesus Crispin Remulla stressed that they remain under investigation and are not immune from charges. He said new evidence from their testimonies has drawn more names into the case, with the DOJ now moving to freeze suspects' assets. Malacanang is turning up the pressure on flood control contractors Curly and Sara Discaya, urging them to return the funds they allegedly plundered. Palace Press Officer Claire Castro said President Ferdinand Marcos Jr. expects the couple to give the money back on top of facing cases. Castro issued the remarks when asked about the Discayas entering the government's witness protection program. The firm, St. Timothy Construction Corporation, was among the biggest earners from flood control contracts flagged by the president himself. Former Finance Secretary Cesar Purisima is calling for the abolition of 500 peso and 1,000 peso bills, arguing smaller denominations would make it harder for officials to move ill-gotten cash. Purisima issued the proposal after former public works engineers testified that about 1 billion pesos in flood control kickbacks were stuffed into more than 20 suitcases and delivered in vans to Ako Bicol Representative Zaldi Ko. The Bangko Sentral ng Pilipinas, for its part, has already limited over-the-counter cash withdrawals to 500,000 pesos a day in a bid to curb money laundering. We have this just in. A former DPWH undersecretary drops a new bombshell in the flood control corruption scandal, alleging a 160 million peso payoff linked to Senator Chiz Escudero. Former Undersecretary Roberto Bernardo testifies before the Senate Blue Ribbon Committee that he personally delivered the money to Escudero's ally and campaign donor Maynard Mu. He also claims that a staffer of former Senator, now Makati Mayor Nancy Binay, sought a 15% cut from 2024 projects, with the payoff allegedly handed over in Quezon City. Escudero, who was recently ousted as Senate President, has consistently denied taking any commissions. These latest allegations bolster earlier testimonies tying other top officials, including Representative Zaldi Ko and former Senator Bong Revilla, to the multi-billion peso flood control scheme. The flood control corruption scandal could expand further, with two more incumbent senators likely to be named once evidence is unsealed. On BNC's At the Forefront, attorney Raymond Fortun, lawyer of whistleblower Bryce Hernandez, said his client will not publicly name anyone without hard evidence. So far, Hernandez has identified Senators Joel Villanueva and Jinggoy Estrada in the kickback scheme, backed, he claims, by receipts, photos, text messages, and other documents.
In his own words, sabi niya, ang hirap magturo na wala akong basehan.
As for Hernandez's computer, now treated as key evidence, Fortun admitted he cannot guarantee it wasn't compromised, but insisted that it was turned over to the DOJ in good faith. PDP Laban spokesperson attorney Ferdinand Topacio defended Duterte supporters, saying their demonstration last Sunday was peaceful. On BNC's At the Forefront, Topacio stressed that they had no part in the violence at Mendiola, where a separate group set fire to a container truck and hurled rocks at police. He also dismissed claims that he financed the rioters to stir chaos during the protests.
We want to make it clear na hindi po kami.
Elsewhere in the world, U.S. Vice President J.D. Vance is condemning political violence, comparing Wednesday's attack on an ICE field office in Dallas to the recent shooting of conservative commentator Charlie Kirk. Vance branded both incidents as disgusting acts of political violence. The FBI is calling the Dallas shooting a case of targeted violence. Authorities say a gunman killed a detainee, wounded two others, and then took his own life. The shooter has been identified as Joshua Jan.
But what we know is that in Dallas, Texas, an ICE facility, an Immigration and Customs Enforcement facility, was opened fire upon by a violent left-wing extremist, a person who wrote anti-ICE messaging on their bullets, and there's some evidence that we have that's not yet public, but we know this person was politically motivated. They were politically motivated to go after law enforcement. They were politically motivated to go after people who are enforcing our border. And I think that is the most disgusting thing.
In the United Kingdom, a man in his 40s is under arrest in West Sussex, England, over the cyber attack that knocked out automated check-in systems at major European airports. The UK's National Crime Agency says the suspect is out on conditional bail, with the investigation still ongoing. London's Heathrow Airport says most flights are now operating normally, while Brussels Airport warns of some limited disruptions. The incident highlights the growing business cost of cyber risks, from flight delays and stranded passengers to insurers and companies bracing for millions in losses. And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us, and keep it here on BNC, the Bilyonaryo News Channel.